It's Friday, June 5th. I'm Brian Walsh, and welcome to This Week in Impact, where I talk with ImpactAlpha journalists and editors about some of the most interesting impact investing stories we've been covering. This week I'm joined by editor David Bank. We'll discuss the UAE put $30 billion on the table to mobilize climate capital for the Global South. 2.5 years later, we take a look at what they've accomplished. Plus, how Fervo Energy just pulled off the biggest clean energy IPO in Wall Street history. And finally, this week's deal spotlight shines on working capital, the Omidyar Network spinoff, which raised an initial $31 million for its third fund to continue investing in sustainable and humane supply chains. That's all coming up on This Week in Impact. Hi, David. Welcome back to the podcast. How was your time in Peru?
Yeah, Brian, I missed you. We had a terrific time in Lima and in the highlands around Cusco and Machu Picchu. Just awesome.
That's amazing. And so it was a little bit of work and a little bit of fun?
Absolutely.
All right. Well, first up this week, the biggest bet in climate finance mobilization was placed at COP28 in Dubai, a $30 billion commitment from the UAE called Altérra, explicitly designed to unlock private capital for the low-carbon transition in emerging markets. David, 2.5 years in, you and our colleagues Eric Stein and Amy Cortese took a hard look at the numbers. So what does the scorecard actually show?
Yeah, Alterra was a very ambitious swing. The UAE hosted the Global Climate Summit known as the COP a few years ago. And as part of that, they put down this kind of marker to raise capital for the Global South, as they said. And it was a $30 billion fund. $25 billion of it was to be for, more or less commercial climate investing. And then $5 billion was a kind of catalytic fund they called Transformation. And it was specifically to seed funds that would invest in places that were harder to reach, that generally speaking are in the Global South, in Africa, Asia, and Latin America. It's interesting that low and middle income countries, even though on a per capita basis they emit way less than folks in developed countries, all told, something like 3/4 of global emissions are from the Global South. So if the climate battle is to be won, there has to be a lot of investment in places that are growing fast and using a lot of energy, and particularly not to let them get locked in on fossil fuels, coal and gas and oil over the next 20 or 30 years, but to have them on a more renewable path. So Altera was a way to seed the big private equity players, the TPGs and Brookfields and KKRs of the world, to pay more attention to the Global South.
So that was the setup. $25 billion for the commercial fund and then $5 billion for catalytic capital. What were the results?
Well, so it's interesting. The catalytic capital for the Global South actually catalyzed less in terms of multiples of on per each dollar than the commercial investments. And maybe this is not surprising, but the commercial investments, and these were in funds at Brookfield and at TPG, mobilized something like $9 for every dollar that Altera put into those funds. And then the two major Global South funds, again at TPG and Brookfield, are targeted to raise only something like $4 for every dollar that Altera put into it. And that would have amounted to something like $6 billion. And so far, they've attracted only about $2.4 billion. So they say that fundraising will pick up and that not all of it's been reported. But so far, it bears out what we've known for a long time, which is it's very hard to get private capital to go into some of these tougher markets.
Right. So they can say that the impact is there, but maybe the catalytic aspect of this is not. So these investments are indeed having an impact as intended, but they're not necessarily catalyzing outside of the usual suspects of, development finance institutions and the like that were already going into these types of markets.
Yeah, and one thing that's interesting is those funds did attract investments from the International Finance Corp and from some other development finance types. And as you say, those folks are considered more usual suspects. They have a mandate to invest in the Global South, but in fact, they are not able sometimes to invest through these broader climate vehicles because those have a broader geographic distribution. And so these new funds that TPG and Brookfield created were actually better suited for folks like the IFC, and they did invest in both of those funds, as did the Asian Infrastructure Investment Bank in the TPG case. That's good, but the notion that private capital is now catalyzing the development capital is a little bit backwards. It's supposed to be the other way around.
Now, you spoke to a principal from Altera recently at the Milken Global Conference in LA. What did he have to say about the fund's performance and what their ambitions are here?
Yeah, His Excellency Majid Al Suwaidi, who was down at Milken and who's been on something of a press tour, and we had a sit down. And he's very engaging fellow. He comes more from a diplomatic and engineering background. He was the president of COP28. Now he's been turned into a finance guy, and he's quite bullish. It says that folks are beating a path to their door to obviously get a hold of some of this $30 billion. That's not surprising, but even folks like BBVA, which is a big Spanish bank, have placed $250 million with Alterra to invest in North America, Europe, and Latin America. And so Altera has become not just the LP to these other funds, but now a fund manager of its own. And so they are looking to make a big swing, to place big bets, and to raise big capital. I will say that some of the things that those funds have invested in are not exactly the kind of frontier kind of energy access projects that people might think about when they think about clean energy investments in a place like Africa. TPG's Global South Initiative, for example, acquired some wind manufacturing businesses in India and Sri Lanka. They built a gigawatt scale clean energy powered AI data center in India. And so these are again big clean energy infrastructure plays, not necessarily kind of base of the pyramid energy access plays.
Right. So it's not going to those sub-Saharan Africa energy access plays that were kind of maybe expected or hoped for when you're talking about catalytic finance for climate.
Well, the kinds of projects that really need kind of catalytic financing, you're right, are in countries where the risk factors are high, where the other kinds of private capital is not really flowing. And so, there's a people talk sometimes about the deep end of the pool, and I would say that Altera has generally stayed in what has been sort of more institutional grade, less risky, better counterparties, those kinds of things that might have gotten financing otherwise.
Right. Those are characteristics that institutional investors already seek, right? They want those, predictable cash flows and nice scale and proven tech. But the idea of a catalytic investment is to go beyond those.
Yeah, and I will say, Altera is trying to do those kinds of deals within the constraints of their mandate, and their mandate, frankly, is to prove out, and to prove out also to other Middle East investors that renewable energy is a good and solid investment. And Mr. Al Suwaidi, says that they have made inroads in that among their oil and gas friends over there.
I think that's also a key takeaway about catalytic financing. That kind of catalytic structuring can attract capital to near bankable projects, but it can't, manufacture bankable projects out of thin air when the fundamentals underlying those projects don't support the investment.
Right. And to be fair, TPG and Brookfield are in the business of doing these kind of big and, relatively mainstream kind of investments. One of the things that we found interesting was that TPG's Global South Initiative is really a carve out from something called the Rise Climate Fund, and in particular, Rise Climate 2. And so $1 billion of the money into the Global South Initiative actually comes from another Rise fund. So getting the Altera money has caused TPG to commit $1 billion of its money from its Rise fund to its Global South Initiative. It's a little bit of moving it from one pocket to the other.
Right. So there's something untoward here. I mean, that's still good impact, but it's more of moving money around than bringing in new capital to bear on these kind of investments.
Yeah, sometimes what folks do is they'll say, okay, this is a good investment. It happens to also fit into the Global South bucket. Let's assign it to that fund and count it in that way. And as you say, that doesn't necessarily increase the total quantum of money.
Yeah, I like the quote that you had in the article from Duke University's Jonathan Phillips. He said, "Would these projects have happened anyway? Probably yes, but just a little slower."
Yeah. So it's it's moving in the right direction. It's not necessarily going to fulfill the very deep chasm of need for investment in climate finance in the global south, which is considered to be something like a trillion dollars of outside money. And folks think that the countries themselves can mobilize something like $1.4 trillion a year by 2030. So that's the $2.4 trillion that folks say is needed to stay anywhere close to the Paris climate goals, which already seem like slipping out of reach.
All right. Well, you can read Amy, David, and Eric's piece on Alterra's catalytic climate funds on impactalpha.com. There's also a link in our show notes. Later in the show, we'll discuss sustainable supply chain investor Working Capital's latest raise. But for now, we'll take a quick break. When we come back, how Fervo Energy just pulled off the biggest clean energy IPO in Wall Street history.
Hi there, Agent of Impact. This is Dennis Price, CEO of ImpactAlpha. For more than a decade, ImpactAlpha has been helping you find the alpha in impact. We've now built ImpactAlpha Edge to bring you structured data and market intelligence to help you move faster, invest smarter, and multiply your impact. ImpactAlpha Edge is designed to help GPs and fund managers raise capital more effectively. LPs and allocators find each other and discover overlooked opportunities. Think of it as a purpose-built pitch book for impact, with the editorial judgment and network trust that no algorithm can replicate. Come check it out. Book a demo today. Learn more about ImpactAlpha Edge in our show notes.
Next up, Fervo Energy rang the NASDAQ opening bell last month with a nearly $2 billion IPO that popped 33% on day one. In a post this week, ImpactAlpha contributing editor Anthony Buglevine used the Fervo story to map out exactly what it takes to get a transformational energy company from a drilling engineer's hunch to a $10 billion public company. David, Anthony's argument is that Fervo is essentially a recipe and that replicating it requires understanding every ingredient. So, what does that recipe actually look like?
Yeah, it's lucky that Fervo kind of came out when it did because, a $10 billion valuation, compared to, say, Anthropic's $1 trillion anticipated IPO or what have you, might not have caused so much of a stir. But in the clean energy world, it apparently is the largest IPO ever. And it's a very interesting company. They essentially use fracking technology. So fracking was developed, as folks know, to get more oil and gas out of the ground. But this horizontal drilling technology also turns out to be able to be used to get more geothermal out of the ground. So there's much more geothermal than people had realized before, and it's really quite a valuable and addition to the energy mix because, like nuclear or frankly like natural gas, it can be run all the time, unlike wind and solar. So it becomes a kind of a base load energy source. And so Fervo has got a lot of attention now as folks are grabbing any kind of electricity they can to power these data centers. But to get it there, as Anthony laid out, was quite a kind of winding path. Like the CEO of Fervo, who was an oil and gas guy, who came upon this notion that you could use it for geothermal, to try everybody he knew in the business to say, look, this is going to be a great business. Couldn't get any takers, finally started his own company, patched it together with some very early government grants. There's an outfit called ARPA-E. Folks might know DARPA from, so one of its famous achievements was seeding the early internet. And ARPA-E is an advanced research projects effort of the Department of Energy. And they did some early kind of proof of concept grants. Then the early impact investors got in, Elemental Impact, which we've had on the podcast. Breakthrough Energy Ventures were early backers, Capricorn Investment Group. So all the folks that ImpactAlpha readers know were very early into Fervo for all the reasons I just mentioned. They get another $25 million for what folks might think of as a first of a kind or folk kind of installation, which is kind of one of the valleys of death that some of these startups have to cross in terms of getting to actually commercial scale production. And then once they did all that with government and impact money, then they were ready for the big show. They raised a $462 million Series E last year, and then they went public this year and paid people off very nicely.
So I want to drill in on two of the structural barriers that Anthony's piece kind of actually named, and you just mentioned them in passing there. One is that first of a kind, and the other is the valley of death. So first of a kind, that's, capital won't move projects from paper to practice before commercial proof. So, you have to have backers that understand that, you need to make some bets here and take some swings.
Yeah, in the old days, everybody wanted to be asset light, and so they wanted to develop the software or the intellectual property, but they didn't want to actually put a lot of, concrete and steel in the ground to build actual, installations, and because that takes a lot of capital, and so there had always been a gap to actually get the commercial plant built, and you can't kind of scale up and get to the kinds of run rates and the revenues that folks want to see for without those plants. So there was kind of like this chicken and egg problem on commercialization, and folks have been chipping away at that for a long time. Frankly, one of the big sources of that kind of capital was government funding, and particularly the Department of Energy. Much of that for clean energy kind of has gone away recently, shall we say, but geothermal for some reason has escaped the ire. The Trump administration doesn't much like wind and solar, but for some reason it does like geothermal. And so Fervo has been able to stay in the good graces, and is a success story of the way that government money and as I said, impact money can get folks over that hump.
That next structural barrier that Anthony lays out, though, is that valley of death. So that long underfunded stretch after that early validation, but before institutional investors are willing to step in. And so that's the other kind of bucket of capital that is needed to help smooth over that timeline.
Yeah, again, Capricorn, which is known as something of an impact investor, certainly a clean energy investor, came through not only with the early equity investment, but with the corporate equity portion of the financing needed for this Cape station, which is the Fervo's commercial installation in Utah. So it was, again, folks that ImpactAlpha readers know quite well, really, who should take the credit for having bridged Fervo through some of these various valleys of death.
So what is Anthony Buglevine's call to action here for foundations, family offices, and policymakers about how they can take action here?
Well, it's just to lean in on and this catalytic capital notion that you can have a big impact if you get in early, if you take a little bit more risk, if you work with the company to find out what their financing needs are, really to move them along, and that just waiting for everything to be fully baked is not a recipe for getting new things done. And Fervo is a genuinely new thing. I mean, if we can get that kind of geothermal energy pumping into the grid, everybody would be a lot happier, including the new AI data center, which have a voracious demand for electricity, but all the rest of us as well, because it is a very good and reliable source of clean energy.
All right, you can read Anthony Buglevine's latest column on lessons from Fervo's IPO, which was adapted from his new book, Investing in America, on ImpactAlpha.com. There's also a link in our show notes. When we come back, a deal spotlight on the third fund from Working Capital, which invests in sustainable and humane supply chains. Finally this week, Working Capital. The Omidyar-backed fund manager secured an initial $31 million for its third supply chain resilience fund. David, why did this catch our eye?
Well, we've been tracking Working Capital Fund from the beginning. It's actually a spin out from something called Humanity United, which is itself sort of affiliated with the Omidyar Group, and was started to combat modern day slavery. And the Working Capital Fund thesis was that the way you could root out some of these human rights abuses was to focus on the supply chains of global supply chains of major corporations. And as you know, there's often a lot of let's say, less than stellar working conditions behind the scenes in some of the contractors that major corporations use. I mean, the well-known examples of slave labor in some of the fishing industries in Thailand and Indonesia, or sometimes the weaving industries in South Asia, or even sometimes the electronics industries in various places, and that if you could monitor and assess and track track and trace those supply chains, you could root out some of those bad labor practices. So working capital over the last 8 or 10 years has invested in something like 24 investments in kind of these kind of technology plays that are useful for sensing and tracking the supply chain. Now, they've had a number of exits, I think 4 all told, of selling a software supply maker, Supply Shift, to Sphera. There's another supply chain risk management company called Versid AI that was acquired, and then Ulula, a startup that crowdsources worker feedback and grievances. And again, the notion being that if you understand what your workers are saying, you might be able to attack some of these risks before they crop up in headlines. So all kinds of things that actually are good business, ultimately, even if they might in the short term raise costs by raising working standards, they're probably a good idea in the long term, especially for major corporations that care about their reputations.
Now, this latest fund, the first close, was anchored by the Emilia Group itself, the Soros Economic Development Fund, and the Minderu Foundation, with SAP and Stardust Equity also joining in as new investors. But what caught my eye in the write-up we had about it was that they are expanding their thesis for the AI age, including investing in startups that use AI to, quote, empower rather than displace workers.
Yeah, this is something we've been looking at too closely, which is, ways that AI can be, not a job destroyer, but a job augmenter. And clearly it's useful in all sorts of ways in this tracking and tracing of the supply chain. And we'll be interested to see what kinds of plays Working Capital Fund comes up with. But they clearly want to get in on all the potential uses of AI and frankly steer it in a way that is more sort of worker empowering as opposed to worker eliminating.
All right, you can read Amy Cortese's deal spotlight on the Working Capital Fund on ImpactAlpha.com. There's also a link in the show notes. Working Capital Fund is also on ImpactAlpha Edge. Check out their profile. But that's going to do it for this episode of This Week in Impact. Thank you, David.
Thank you, Brian.
And thank you all for listening. This Week in Impact is a production of Impact Alpha and part of the Impact Alpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For David Bank, I'm Brian Walsh, Managing Director of the impact advisory firm Human Nature. We'll see you next week for more Impact.